Alright guys, SPX S&P 500 today down 2%, and we had many of these days. So what to watch from here? So let's have a look at the technicals and what I'm watching from here. Tomorrow we have FOMC around like 2 p.m. Eastern time. And there are more data coming out, more earnings coming out, but overall S&P 500, most of the earnings are out. So what I want to show here is, let's zoom into 4 month. So last 4 month, we have been, and we're still so far in an uptrend. Okay, 4 month trend up. If we take a look at the 6 month to 9 month trend, basically somewhere from here, market is neutral to flat, pretty much sideways. And if you just zoom out to 1 year, 9 month to 12 month, market is still in a downtrend, bigger picture. So, but ultra short term, what's going on? Year to date, if you take a look at the S&P 500 components returns, well, tech names are still high, up very nicely, and they're pulling back. So that's absolutely normal with me. And if you take a look at the today's losers, biggest is consumer cyclical, then technology, then communication services. And we also have, I think, GDP number coming out on Thursday, if I'm not wrong. So where we are right now, so from the beginning of the year all the way to highs of basically 4,200, market went up, I think, about 10% or so. Where we are right now is basically we are half point. So we pulled back, basically we gave back half of those gains, and market may need more data from the Fed. So tomorrow, if FOMC indicates that there's going to be a pause, well, that could be a good sign for the market to digest, maybe do something like this and then move higher. So if you take a look at last time, we sold off and we moved sideways, and then we recovered in the beginning of the year. We could do something like that, but we don't have to come crashing down like this, because this meltdown was very slow, illiquid, I want to say. It wasn't, if you pull up the SPY chart just to take a look at the volume, it wasn't coming down with big volume. It was very slow, snoozy pullback, and we're nearing 50-day moving average. We are nearing 200-day moving average. So if we bounce off of, anytime you see 50-day moving average in an uptrend like this, market is in an uptrend. You don't want to bet against it right here at that moment in time. You want to let it crack. You want to let it go below it, and that level act as a resistance if you want to short. And if you take a look at the red line on my chart, represents 200-day moving average. We're still above it, and this trend line again, until we go below all of these moving averages and this uptrend, I'm not short biased. So, but again, it all depends what Fed is going to say. So here's another thing I wanted to show. Percent of stocks above their 5-day moving average is 9% today. So, and you can go back, you can just pull up this chart yourself. So go to bar charts and pull up the percent, just S&P 500 index, and take a look at the percent of the stocks that are above their 5-day moving average, 20-day moving average, 50-day moving average. Whenever you see, I kept telling about this for the last 2 weeks when we came back up to these levels in S&P 500, that, hey, when momentum slows, that means you're not long biased, you're not short biased. And that was the whole point of keeping an eye on market internals to basically catch a trade or position yourself in the market. So pull it up and see what happened after market hit so many times those low numbers and what market did. And also I was pointing out the put to call ratio in SPX. You can see every time put to call ratio gets back above 1.4, 1.5. Last Friday was 1.6. Today maybe it's going to come out even higher. you know that a lot of people buying puts at that time, and it's not a good time maybe to go long. I mean, it was not a good time during this time right here. So today's heat map, I mean, there wasn't a place to hide. You can see well-performing indices. I mean, the sectors in S&P 500. This is S&P 500's heat map. They're all pulling back. Some energy names, some consumer defensive names held up. I think today Walmart reported earnings, so which means we're probably done with S&P 500 earnings, but there are some earnings coming out as well. Coinbase reported, and there are some other earnings we have leftovers, but maybe 80% of the S&P 500 has already reported earnings. And yeah, so that's in terms of like support levels for SPY SPX. I'm watching this 50-day moving averages as a support levels. So for SPY, for maybe rest of the week, watch 50-day and 200-day. So 50-day somewhere around at the moment 397, and 200-day moving average 393-ish level. So these are the two support levels I'm watching, and it can definitely come down to these lows and maybe even hit that trend line. But if it does bounce off of 200-day, there are going to be a lot of people who will try to play that bounce. But if it does crack below these 200-day moving averages and 50-day moving averages, you want to be cautious. As soon as SPY goes below 390 and SPX goes below 3,900, basically, you want to be careful because we can basically flash, and a lot of people who try to accumulate at these levels, I mean, they would be trapped. 4 months of basically this consolidation sort of a move, because you can see before New Year there are a lot of people trying to accumulate, and then after New Year there are a lot of latecomers who came to buy this rally, and it pretty much stalled and didn't do much, and now it's rolling over. And if it rolls over more, people are gonna sell. So basically 3,900, 3,800 support levels for me, and below that 3,800 we have 3,600, another support level for SPX. So that's a quick update for SPY S&P 500. We'll see what happens tomorrow, the day after tomorrow, after all those numbers come out. You can just, if you're not sure where to follow all these data, I mean, I use economic calendar, which is useconoday.com. So you can follow, the events here. I mean, it's pretty simple. Layout for me to keep an eye on things. You can also look at it on Thinkorswim, but I like it here. I want to know what's going on. Today we had like home sales, PMI, composed, all these data. Tomorrow we have like FOMC. The day after tomorrow we have GDP, jobless claims. Very, very simple, easy to use. So yeah, keep an eye on it. What's going on? What will be going on tomorrow, the day after tomorrow, after these data comes out. We'll definitely cover it. But thank you. See you in the next one.